Sandeep, welcome to the show.
Thank you, Louis.
First of all, I am very happy to have you as a guest of ours. I have looked at your book. You know, one of the things that I really liked about your book to begin with is the title. The whole point of professionals and entrepreneurs is they build their castle. The way you've treated it as to build the castle, I thought that was really, really clever. When we do build our independent firms, we put our heart and soul in it. And it just resonated. So well done on the title. If you could just tell me a little bit more why you did that title, that would be fantastic.
Oh, that's great. Yeah, for years, as I built businesses, mainly turnarounds, I used the infographic of a house, but I felt that houses don't last. And so I said, okay, let me start researching castles. And a friend of mine actually gave me the clue because I can't take credit for the initial idea. And then I started researching it and I said, all the elements that I talk about in building a good company are in some way analogous to structures in a castle that make a castle last and strong. And so that is why I basically coined the title, Your Company is Your Castle, because I said if you can build your company with structural elements which are similar to that of a castle that has made it last, it's very likely that your company will also last.
I love the analogy. And who doesn't want a castle, right? I mean, if I had to pick a house and a castle, I'd pick the castle any day of the week, right? Let's be honest, right? So I just love that. That's an amazing thing. So let's start with some of the things that really resonated with me as a professional accountant and in the professional business. One of the things that you mentioned was stickiness is crucial to sustain the business model. And I believe that wholeheartedly, that the stickier the customer is, the better the model is in total. Could you just go through some of the dynamics of what you consider to be sticky?
Yeah, so the whole idea of stickiness is what is your proposition of value to the customer that in the face of competition, they will not abandon you, they will stay with you. Okay, and so I give two examples in the book. I said one is our smartphone. Why do people either prefer the Galaxy phone that Samsung produces or the Apple iPhone? It's because we are used to the user interface. We like the applications. We like the ecosystem. We like everything that's connected to it, including storing pictures and things like that. The pain to move away and learn something new is unappealing as long as my phone's working really well. And now, as they started to add, for example, features like paying through your phone, it's even more sticky. And so the barrier to move because you're disappointed is kind of large.
I just love that example. That's great. The barrier to move is large. I love that. That's fantastic.
The second example I give is an enterprise business. So when you're an enterprise company and you want to build a website and you want to build a shop front, etc., and you build all of that or a bunch of applications, right? You build it on a cloud service like Azure or Google Cloud Service or Amazon Web Services. And you invest a lot in that and you build on their platforms. And then you deploy it to hundreds and hundreds of customers around the world. Now for you to uproot all of that and move to a new cloud service is really hard, especially when you have paying customers using it. And that's a form of stickiness. So stickiness comes from two aspects, right? One is the desirability of the product and the value it adds or brings to your customer, their reluctance to move away. And the second is maybe the business model. Is the business model so compelling that you absolutely won't move away? So there are two aspects to it. And I believe that when you build a business with the principle of stickiness, you have a higher chance of success.
And that's extremely useful for professionals, right? Because the stickiness component for us is all about the trust, building the trust within the customer base and making sure the trust goes well. And I like the fact that the barrier is very interesting, is as long as the barrier to move is high, then you have more flexibility in making mistakes or trying out things. So I really like that, because The harder the barrier, the more tolerance your customer has with you.
Absolutely. And, I always say that you can't stop at that. How do you get your customer to invest in you to increase their value proposition? And that makes it very hard to move because I say, building a skyscraper on your foundation.
Right, right.
Even if somebody has something with some better attributes, it's highly unlikely they'll rip out the foundation.
So you actually went into one of my other questions, because I was going to talk to you exactly about how does that work. Like, to me, that was a very unique component in your book when you literally talked about get the stage of the stickiness, and then the next level is the customer's actually investing in you. That's another level completely above stickiness. And if you could talk about that a little bit, because when I read it in your book, that was something brand new for me. So I would love to hear more about that.
Yeah. So, there are many, many different attributes that one can look at to build stickiness. I mean, a common one for techies like me is just technology, that you have such superior technology that people find it very hard to move away. And a classic example is NVIDIA, with their graphical processing units and their advances in artificial intelligence. And you can see what their stock price is today.
Right.
They're
right.
trading at a price to earnings of 215x or something like that. So
Right.
it just shows the value they bring and to customers and why they're valued so highly. Technology is a big differentiator and it can bring stickiness. There are other attributes. For example, trust. Why do some of us who banked at a particular bank and use their credit cards have stayed with them for 25 or 30 years? That's another form of stickiness. It's based on trust. Another form is an attribute like quality. So if you look at the aerospace industry or the automotive industry, quality and safety are extremely important.
Right. Yeah.
It takes years and years to get that level of maturity. And when you get that level of maturity and you're designed into a car or into a plane, you're there for 15 years. You're not just going to be ripped out, because unless you had a catastrophe and you had a major recall, you're going to be. Then there's another attribute, and this is perceived value you get. And that could be either real or it could be perceived. And that is, take, for example, very, very good brands like Nike. They portray a certain attribute that many people can associate with, and they want to be associated with that brand. Okay, so like this in the book, I've talked about a whole bunch of attributes which create that stickiness, because that is what your customer values, is investing in, and is going to be very, very averse to moving away from that proposition.
You brought up real value and perceived value. Which one's more important, real value or the perceived value when it comes to stickiness? Which one's better?
The thing is, many a time, always perceived value should lead to real value.
Yeah.
Because you can't just have perceived value all the time, because you have to actually find a way to use something and then find value in it. Otherwise, the barrier to switching goes away.
So perceived value tends to come first, and then real value is the deliverable component. People perceive your value, then you have to make sure you deliver value.
That's right, because many a time I look at it and say, okay, it's like a storefront. I want the storefront to be attractive enough for you to come in and buy something. And then after you've bought something, how do you continue to buy from me? So the product is the proof. The product or the service is the proof that you will continue to buy from me.
And that's a big thing, right? So you develop the perceived value to get people through the door. And the end of the result is the outcome, right? The outcome is the key to get them coming back. Is that correct?
The proof of the pudding is in the eating.
In the eating of the pudding. I like that. I love your analogies. The food and everything. This is great. Actually, I'm getting a little hungry, to be quite honest. So that worked out really well. So here we're going to go into a little bit more technical, because our group is accountants. You have the 3 C's of revenue. Go into those a little bit, because I think that's very useful to know what the 3 C's of revenue are.
Yeah. So whenever I think of revenue, I actually think of three C's and one Q.
Oh, okay.
And I'll tell you about, I mentioned both in the book. So when I look at revenue, how do you generate more and more revenue? The first thing is you need to make sure that your products and services has coverage. You can't just be in one segment or in one geography or at one price point or one shelf. Then your market is much smaller. So it's obvious that you want to be in as many geographies and as many segments and as many price shelves. How do you get coverage? So that's one, that's the first C. The second is competitiveness. How do you make sure that your product and your service is competitive? Like, how are you comparing against the competitors? And I have a whole section on creating product competitiveness. I think it is one of the chapters in the book. And so, how do you do that? And the third is great, you have now coverage and you have a great product. How do you convert that exposure and that wonderful product into revenue? And
Right.
for that, you need to have a terrific sales team. And I have a whole chapter dedicated to what productive sales teams really do. So those are the three C's. And then Q stands for the quality of revenue. And I look and say, how are you making your revenue? When I evaluate companies, I want to know, how are they doing this? I wouldn't say clean, but I would say, how sustainable is that revenue? Like, for example, if you're stuffing channels, right? Then that revenue, if depends on whether you have sell-in or sell-out accounting or sell-through accounting, it has an implication if you can't sell that inventory that you stuffed into the channel. If you're doing buyouts or buy-ins, right, they're lump sum payments for future value. Or if you're doing factoring, where you want cash quickly and you're paying a premium for it. So these are things that always highlight to me that this company is in trouble. Or if they're using a lot of NRE, they get money for doing projects and they're using that to basically offset their revenue. This is all signs that something's wrong and one has to be careful.
Well, the Q one actually intrigues me a little more because the quality of revenue is probably a very good one to assess the strength of the company, right? Because if the quality of revenue is strong, meaning that the way they generate the revenue is at a high level, that tends to be better. Or if it's unstable or not as it's risky or shaky, that also impacts. So let's talk a bit more about quality. How do you talk about quality? Like, what do you mean by quality of revenue? Like, is it certain factors that make it stronger?
I just look and say, like, normally you want revenue to come from selling your products
Right.
and your services, with a regular cadence. But when you start, people resort to these other techniques only when they have shortfalls and they have quarterly numbers to hit. And that's when the game starts. 1 or 2 quarters, you might have shortfalls and you might be able to fill them with things. But if that is going on an ongoing basis, then you know that their pipe is weak and they're not executing to their original plans. And then one has to be wary. I always look at that when I'm evaluating companies to say, okay, let me dive deeper into what's happening. So these are indicators to say, dive deeper. They're warning flags.
That's great. I'm going to start with the back of your book because I think when I went through your book, the part that I really enjoyed, and we'll go back to other parts, but the 7 beliefs really got to me, Sandeep. If you could go through those, because I thought that was probably the core of not just building the right castle, but also the way to live and the way to expand your profession. If you could go through those, that I would really enjoy that because I just love the 7 beliefs that you have in your book.
Great. Now I got to remember them.
I'll help you. I'll help you with that.
No,
I'll start with,
I think I do. I think I do. You
okay.
know, basically, I wanted to conclude the book with a chapter that I said, okay, now that we've talked about building a castle and building a magnificent castle, not just a castle, how do you build yourself to run such a castle? I started by saying everyone's career or career journey is a personal journey. No two people have very similar journeys. And I came across a wonderful definition about who's a leader, because there's all sorts of different definitions. And this one came from Joel Arthur Barker. He's a futurist. And he said, there's a difference between a leader and a manager. He said, a manager is one who manages within a paradigm. And he said, a leader is one who manages between paradigms. And that's very profound. And so what does it take to lead and manage between paradigms? Because you're creating a paradigm shift. I looked at my own career, and I've been very fortunate. I came to North America as an immigrant with not too much money. And I was offered fantastic opportunities. I grabbed every one of them. I don't think I had a plan. And it just worked out. Some of the things that stuck with me was, the first one is dream with conviction.
I love that one. Dream with conviction. Sorry to interrupt, but I just loved it. When I read it, I'm going, I just loved it. Sorry, but I loved it.
When I was a young student in the University of Saskatchewan, I was reading about cell phones. Everyone told me that's an uncertain future. But I thought this is going to, because they said it's strapped on your back, it's large, who's going to use it? But I said all technology evolves, and I dove headlong into it. I did a PhD in it, and I never regretted it. I spent 18 or 20 years in it, and it was a fascinating career. And I got to, anyway, so dream with conviction. The second one I always tell people is get out of your comfort zone as often as possible. It is very tough. The first time I got out of my comfort zone from being a mathematical researcher into building products, I knew very little. And I always tell people that I was the runt in the litter, because everyone knew more than me. And I got bitten. I got bitten by the older pups. But you very quickly learn to adapt, adjust your mindset. For example, I'd get up at 4 o'clock in the morning and learn about the products. I'd go to the lab and spend hours, including weekends, get everyone to teach me. And then in 2 years, I knew enough to challenge people. And then I again rotated. I kept doing this. Once I had the formula, you kept rotating. And in a few years, I'd rotated through all the divisions. And therefore, I had an advantage over everyone else. So the next time somebody wanted to pick someone to be a general manager, well, there were not too many people who had the exposure except me. The third one is, I say, learn from success and failures. Successes are always elating, but failure, if you choose to confront it, teaches you a lot. I've had a lot of successes. I've had many no failures, but every stumbling block became a stepping stone to success because I learned, of the things. I reflected on it. I said, why did this happen? And then what could I have done to avoid it? And if you take it to heart and improve, and I've given examples in the book, I won't go through all of that. The fourth one is learn to deal with adversity. Adversities can embarrass you, freeze you. Always learn to basically either walk away from it or deal with it. Don't let it swallow you. A professor or a friend of mine gave me a great example. I was very upset once that something bad had happened to me at work. And I was really upset. And he said, Sandeep, come here. I want to talk to you. And we used to meet regularly, discuss algorithms and stuff like that. And so he said, if you're a person who has one sandwich on their plate and somebody took it from you, you should be upset. But you're someone who has a lot of sandwiches on his plate. So it's completely okay. And I took that to mean, hey, don't dwell on the past. Look at the future. There are plenty of opportunities. Go chase them. The fifth one is get battle tested. Steel is made by repeatedly heating, beating, and cooling. Just like that, you have to get tested. I played cricket. I was not a very good cricketer, but I played some serious cricket. I found that no amount of practice in the nets meant anything. But right out on the competitive field, when somebody is bowling with a hard ball and is trying to knock your head off at 80 miles an hour, even though you have protective gear, there's three things. You have to have talent, you have to have technique, and you have to have temperament. That's the only time you're tested. You're never tested otherwise. So even in life, you have to get battle tested to find out how good you really are, right? And only you need to know your scorecard. Nobody else needs to know that. The sixth one is be curious. And a Jesuit priest who was one of my teachers, I went to a Catholic school, he said, Sandeep, it's your choice to be ignorant or not. And so ever since, I have a little notebook that I take down when I'm in a meeting or in a conversation and somebody says something I don't know. I go back and I note it down in this notebook. and I go read about it. And I've done this for 40 years, or 45 years, It's been fascinating because you get a lot of knowledge. You don't have to be an expert at everything. When you have knowledge and you use it properly, it's very powerful. And I tell people, knowledge and attitude break down all barriers for progress, including in your career. And the last is stay true. No one will believe in you more than yourself. So believe in yourself. Do things that you believe in. Don't listen to the myriad of opinions of advisors, because in the end, if you're accountable for something, you will be held responsible, not them. So act on your judgment. And it's never important to say things to be popular. Whatever you say, walk the talk. So those are the 7 beliefs.
Well, like I said, honestly, that should have been at the front of the book, because when I got to the end, I said, oh man, this is great. I wish I read this at the beginning of the book, but I loved it because it kind of goes hand in hand with the castle, right? Because this type of person building that castle will build an excellent castle. That's all I'm saying. I thought that was amazing. And I'm going to go back to one of the things that you talked about when you said be true to yourself. There's a section where it says constant self-assessment, the quadrants of truth. And I really love that part. If you could go do it in 2 phases, if you don't mind. One is talking about a business, and the other one talk about yourself, because I think you should apply it to both parts of your life, right? Not just to the castle, but also to yourself. I would love to get that from you.
Actually, it's a very good point, and it's a really good question, because I have thought of it in these 2 dimensions. In the book, I talk about it as a constant self-assessment of your business. You cannot have rose-colored glasses when you're looking at your business. You have to be absolutely truthful. And it's hard. I have these 2 axes, one of which talks about how much coverage do you have, low and high. And then I said, how sticky is your business, low and high. Obviously, if you have high coverage and high stickiness, you're in the best quadrant. That's a desired quadrant. If you have low coverage and you have low stickiness, oh, you're in trouble. But the other thing is to say, if you're in one of the other 2 quadrants, if you are in very high coverage of your products, but you have low stickiness, you've got to be very worried, because very quickly you could lose to a competitor who gets more sticky. Now, if you, on the other hand, if you have a very sticky product, but you don't have any expansion, then again, competitors can eat up that share and then attack you. There are 2 segments that are really, really dangerous, and you've got to constantly assess it, because everyone evolves. Betting, many times I've found people telling me how their competitors are going to fail. And that's a bad bet. Don't try to win by hoping your competitors will fail. It's just wrong, It's a little bit like the bear story, right? The bear is chasing 2 people. That's just not a good strategy, because if the bear is hungry enough, he'll come after you too. But when it comes to people, I also look at it and I ask myself, the 2 dimensions I talk about is acquisition of knowledge and confidence. And you can have 4 quadrants. You can have low confidence, high confidence, low knowledge, high knowledge.
Right.
What you want to make sure is you're not very confident with very low knowledge. That's a problem.
That's a scary problem. Yes.
Exactly. So, and a lot of people who have a lot of knowledge also don't have a lot of confidence, because they think they don't know enough, because they actually do know a lot, but they think there's a lot more out there.
Right.
The only thing I say is to constantly keep learning, right? Constantly keep learning and get experience. Because one of the things I find is that in order to get confidence, you need experience. You have to put that knowledge to use. And you've got to face different scenarios. And in those different scenarios, you actually learn how to tackle difficult problems. You tackle problems that others have not seen. So you change the boundary conditions and you solve it. And then that goes into your tool belt. And the more and more you get of that, you get confidence. Like, I remember the first business I ran, I grew beautifully, and then I made some horrible mistakes for all the reasons I mentioned in the book. And the business lost $500 million. And that really whacked my confidence. And you ask yourself, can you ever recover? But the next time I got a chance to run a business, I actually asked the person who interviewed me, why are you giving me this knowing I lost so much money? And he gave me a great answer. He said, look, there's a reason we didn't fire you because we think you're competent. And we don't want to waste that expensive education. so, so when they gave me the second job, I had got a lot of knowledge from all the mistakes I made. And I was able not to make the same mistakes. And that helped me the second time.
So Sandeep, it's not the fact that you made mistakes. It's the fact that you didn't repeat them is the critical component, I guess, right? In the story is everybody's allowed to make mistakes. Everybody's allowed to fail. Don't be afraid to fail, but just don't keep failing, doing the same thing over and over again.
Yeah, learn from your mistakes, but it takes a bit to not just not make the same mistakes, but to change oneself, because some of the mistakes are the mistakes you made because of the business itself. And some of them are because of judgment mistakes and the mental makeup you have when making those judgments. And it's extremely important to get that feedback and modify one's thinking and ask yourself, what could your business have done differently? And what could you have done differently? So both are equally important, Louis.
Yeah, no, that's great. It goes back to stay true to your core beliefs, is stay true and be honest with yourself as well with your business. I loved your analogy about the rose-colored glasses. I always, when we build our castle or our business, we treat it like our own child, right? Which is when we look at our own child, right? We look at it completely different as if it wasn't. And sometimes you have to stop doing that to fairly assess it. So I think that was great. So with regards to consultant selling, which is what we do for a living, explain to us a little bit about consultant selling and what we should be looking for.
Yeah, consultative selling is a very, very powerful technique. And I've used it a lot in my businesses. So typically, the businesses I ran, I've had a fair amount of technical expertise in it. I wasn't the top expert, but I had enough knowledge. But before I give the example, the key aspect of consultative selling is to really understand your customer's business. You have to understand every nook and cranny, every facet. Because if you understand the customer's business and the problems the customer is facing, you can formulate solutions. If you do not understand that deeply, you will not be able to formulate solutions. And what the customer wants to pay you for are those solutions. I have a great example. I was actually competing. I was selling chips and software in this particular business for cell phones. And I was in competition with another bigger company. And I went to this European company who was building phones. And they were already entrenched and ready to sign the contract with the other company. So I remember sitting with the CEO and the CTO. And they told me, Sandeep, we've almost made our decision. You've got a great company, you've got very good ideas. But I said, okay, you know what, guys, how about you do this? Can you draw how you're going to build the product with this company and show me your timeline? So they drew a timeline on the board. And I looked at it and said, hey, would you be interested if I can shorten that timeline by almost a year? They suddenly said, what? How do you go? So I went up and I said, how I'm going to do it. And this is what I'm going to do. And I'm not kidding. It's a true story. They came straight. I was in Sweden at that time. They flew to Sweden and signed a contract with me, and they didn't sign with the other guys. I also showed them with proof points that customers who took my chip and software, from the time they were ready to the time they were in market selling phones in shops, was 6 months. And you couldn't beat that. And so they saw the record, and they saw the number of models I had launched. I gave them the proof points, and they said, you can't just say that. You got to give them proof points. For me, the advantage was I had spent 15 years building phones. So I knew their pain points. And so when I was able to resolve, I said, okay, here's a big milestone. This is how I could solve it faster. Here's another milestone. Here's another delivery. And here's what I can do. What they felt is not only the value of my chipset and software, but they said, hey, you know what? All these techniques, we can actually improve our overall business, not just with you. So that's very important. It goes down to understanding your customer's business and trying to point out where they can win overwhelmingly. And that is when they want to not never lose you.
Yeah, brilliant. Honestly, that was brilliant, and I kind of like that, the solution based system that you brought in, and you also talk about this in your book too, is timing, right? So by shortening the time frame to when they get to the customer could have been a really big important factor for them, and you kind of put that in right in front of them. So that was fantastic.
In a competitive, hyper competitive market, time is important because everything depreciates with time. The day you buy the asset, you're starting to depreciate it. You better get some value for it quickly.
Well, you're talking about depreciation. We know about depreciation because we actually depreciate the assets on the balance sheet and income statement. So we know exactly what you mean by that, right? The asset's value is the highest when we buy it, and it goes down in value. Some do go up, but when it comes to items, they go down in value. Well, it's fantastic. I really enjoyed this conversation, Sandeep. The information we got today was invaluable. If someone would like to contact you or ask you more questions or know more about what you're planning to do in the future, how would they go about and do that?
Great. There are two easy ways. If you go to my LinkedIn page and you go to the contact information, you can go to my LinkedIn page, friend me, and of course, I reply to every message that anyone sends me
Fantastic.
almost immediately. But also in my contact information is my personal email. People can email me, and then I can give them my cell phone number if they want to talk to me. You can go to Amazon, you can get my book. The audiobook is coming out. Actually, it's being done by a Canadian company, and it's coming out very soon. The LinkedIn page and my email information is easiest. I also have a web page, and you can go there and fill out a form, but that's a little more cumbersome. And it's www, my whole name, Sandeep Chennakeshu, without a dot, and then .com. Those are the ways you can get hold of me.
Well, thank you for being so accessible. And again, thank you so much for being on our show today. And thanks. Thanks again, Sandeep.
Thank you, Louis. This was a pleasure and a privilege. Thank you again.
Thanks.